Hello and welcome to Market Watch for the end of the week that started on the 16th of October 2017. Very quickly, I'll look at just the other part outside of jobs numbers that really mattered this week, which was China. Monday was around that PPI number and that increased to 6.5%. Really did catch the market off guard. It's why our commodities did quite well at the start of the week. It really did pump iron ore up. It put coal through. However, in saying that, it's reverted back to the mean. And in fact, and what I mean by the mean, it's trending lower. And again, that's all around what's going on with the People's National Congress. I'm sure you're well aware of what's going on in Beijing at the moment with regards to all of that sort of state-based idea that we are seeing Xi Jinping really moving towards what's more of a sort of a Mao and a Deng policy future. That's certainly something to be aware of going over the next sort of 5 years as he finishes out his full-year tenure of 10. All that would be something I'd be probably looking and talking about over the next couple of years rather than for this week. So with that in mind, let's concentrate on what really was the biggest part of the data this week, and that was employment. And look, today is an interesting day to be talking about employment, considering that today marks the end of Holden in terms of manufacturing in this country. Today's the last day. This has been on the cards for the last 4 years. We know that GM has, signed off on the Elizabeth plant back then, but today is the end of it. Interesting, because if you actually have a look at non-manufacturing versus manufacturing, there's a structural trend decline in manufacturing for the last 25 years, and today's sort of a real big mark around that idea that this is the end of big end manufacturing in this country. It's not a bad thing or a positive thing either. I will say that it clearly shows if you look at non-manufacturing, that's where we've been moving. Services is clearly our major sort of employment driver, and that gets me back to the numbers that we need to look at. Having a look at the employment numbers, they are really solid. There's no other way of looking at it. In fact, I'd even go as far as saying the trend is really showing some very positive signs. That trend that you can see at the moment is basically almost a linear 45-degree angle. We're on track. We've now added 335,000 jobs for 2017 and on track to be the best year since 2005. Unemployment at 5.5% is also an incredibly good number, and the trend there is clearly to the downside as well, and that's a real positive in terms of where we're going. It explains what we talked about a couple of weeks back with consumer confidence actually ticking into optimism for the first time in 10 months off the back of employment security now becoming more and more of a thing. I also really need to sort of point out that this is the best sort of run on positive jobs creation for basically since the post-GFC era. We haven't seen a negative print now since September 2016. All of that puts together explains why the RBA believes that GDP next year will be positive. They do believe consumption will come in. They do believe that this sort of movement in jobs growth is clearly translating from business, that therefore are looking at actually investing profits back into their own operations. What we haven't seen yet is wage growth. So the catches and the fly in the ointment of the numbers that we saw was around participation, did dip away slightly. And if you look at the hours worked, they were higher. But if you work that out, that therefore means if you put that with wage growth, we're working longer, but we're not necessarily seeing the return in terms of actually increase in wages. So that's the catch here. This is what everybody points to, and it's why next week is absolutely key, because it is the CPI for the third quarter, and all of that will sort of feed into it. You will get a good gauge of whether or not you actually are seeing an increase in wages. You will get actually to see if there is an increase in consumption pushing up prices outside of food and fuel, and that really needs to be put out there. The core CPI number next week is key, and we just haven't seen that translate, because without housing, we wouldn't have seen really any form of core inflation at all. So big week. Really did expect that, considering that the first start of October is always low, but we are now moving into all the quarterly numbers, all the quarterly wrap-ups, and that's where things get quite exciting. So one tick in terms of jobs. Let's see if we can get it next week as well.